Buying a house, worst investment you'll ever make in your entire life. Average house here is $576. $576 is what you paid. Now you need 12% for broker fees. Let's say you keep the house 10 years. You need 10% in maintenance fees. It's 1% a year in maintenance fees. It's about 2% in property taxes every year. That's 20%. 2 times 10 is 20. And it's probably 7% to the bank, so that's 70%. Total those up, it's 112%. $576,000 home will have to be sold for $1.2 million in 10 years. You're not going to sell it for that. To break even, dead money, and you had to put $100,000 down to do this deal. They're serving a master pay up. And once I have enough cash flow from the assets, then if I want to go buy a house or a watch or a car, I buy it out of the passive income.
Okay, so much of this is just completely incorrect. I mean, let's just break down some of the things that he's saying in this video. Now, you got to be careful because this guy's extremely well-spoken, articulate. He speaks quickly, so you would believe maybe that he believes what he's saying. So first of all, he says buying a house is the worst investment you can ever make in your life. Really, I bet you a lot of people that lost a bunch of money in the dot-com bubble or in any other financial meltdown would say buying a house wasn't the absolute worst thing that they can do, number one. Number two, he says that there's 12% in broker fees. In what world, on what planet, you gotta go to the planet Zoltan to find people that pay 12% in broker fees, so that's not right. 10% in maintenance fees? Really, on a $576,000 home, you're gonna pay $58,000 over 10 years in maintenance? That's almost $6,000 a year. What kind of gardener are you having mow your lawn if the maintenance is $6,000 a year? 2% in property taxes, I'll give you that. In California, it's probably going to be less, but okay, 2% per year in property taxes. But remember, when you own a home, every dime you pay in property taxes up to $10,000 is a tax deduction. So you're writing off almost all the property taxes that you're paying. 7% interest to the bank's fine, but that's a tax write-off up to $750,000 in terms of the mortgage amount. He says $576,000 in 10 years to break even with his weird math. The house has to be worth $1.2 million in 10 years. Check this out. For a $576,000 home to be worth $1.2 million in 10 years, that house would have to go up about 7.6% per year. That's not outrageous. 7.6% appreciation is not outrageous, especially in a state like California. Even if the appreciation was 5% per year, that would still be worth $938,000 at the end of 10 years with just about 5% appreciation. That's still not bad. Also, he says this whole thing is you serving a master. Really, when you buy a house, you're serving a master. When you're a tenant, the person that you pay rent to is literally called the landlord. So I don't know in what arrangement you're actually serving a master, and also he ends with, hey, if you get a bunch of passive income, use the passive income to buy a house, a car, or a watch. Anybody putting owning real estate in the same bucket as buying a watch or a car isn't paying attention. And for more accurate real estate advice from a licensed real estate broker, subscribe.